The EB-5 Immigrant Investor Program offers a unique pathway to U.S. permanent residency through strategic investments in job-creating enterprises. However, the ultimate success and security of this significant investment critically depend on conducting thorough due diligence. For new investors, navigating this complex process can initially seem daunting, but adopting a structured approach is key to minimizing risks and maximizing the chances of a successful outcome. Due diligence in the EB-5 context involves a systematic investigation into the project's viability, the regional center's track record, and the intricate financial structures involved. It's crucial to understand that this process goes far beyond merely reviewing provided documents. It demands independent verification to ensure accuracy and mitigate potential risks. Initial scrutiny should focus on several key areas, starting with the business plan to ensure it presents realistic projections for job creation and capital deployment. Examine the financial health, including historical financials and the proposed capital stack, and verify legal compliance to ensure adherence to all USCIS regulations. Finally, a clear exit strategy outlining how the investor's capital will be returned upon successful completion is essential. The regional center acts as the primary intermediary in the EB-5 process, and its competence and historical performance are paramount to the success of both the I-526 and I-829 petitions. Evaluating their track record requires looking beyond marketing materials to verifiable evidence of past project completions and capital repayments. A reputable regional center should also demonstrate experience navigating USCIS policy changes and transparency regarding administrative fees and operational costs. Always ask for case numbers or publicly available data to support their claims of success. And be wary of any center promising guaranteed approvals, as immigration law does not permit such assurances. The underlying project, whether it's real estate development, infrastructure, or an operating business, must be fundamentally sound. As the saying goes, the weakest link in an EB-5 investment is often the underlying economic viability, not the immigration pathway itself. Critical project due diligence steps include conducting site visits, if possible, to confirm the project's existence and stage of development. Review third-party appraisals for real estate assets to ensure the valuation supports the loan or equity structure, and clearly understand where the EB-5 capital sits in the repayment hierarchy, as senior debt positions are generally safer. Investors must engage independent financial and immigration counsel to thoroughly review all offering documents. Focus intently on the proposed use of funds, ensuring the documentation clearly outlines the exact minimum investment amount, currently $800,000 or $1.05 million, and the mechanism for capital deployment that satisfies the crucial at-risk requirement. Additionally, scrutinize the projected timeline for job creation calculations, referencing the methodology used, such as RIMS-2 multipliers. If the project relies heavily on future financing, investigate the commitments for that senior financing, as a project entirely dependent on EB-5 funds for essential construction stages carries a significantly higher risk. In conclusion, conducting robust due diligence is an investor's primary defense against potential fraud and failure within the EB-5 landscape. It demands a significant investment of time, specialized professional assistance, and a skeptical eye toward overly optimistic projections. By systematically verifying the regional center's history, the project's financial structure, and the legal framework, investors can proceed with greater confidence toward achieving U.S. residency.